Hi guys, um, welcome to today's edition of the mentorship. Today we will continue from where we stopped yesterday. As you guys know, we are going over this course all over again to make sure that we understand what we are doing, and then if there are stuffs we missed before, we could just get them pointed out again. So yesterday we talked about liquidity and how to find liquidity, where to expect liquidity, and not actually how to find it, where to expect it. We we pointed out liquidity, we divided them to higher time frame, medium, and then lower time frame. Where we talked about the medium time frame being the 1 hour time frame, and then anything less than the 1 hour is the lower time frame. Anything above it is the higher time frame. And today we'll be talking about price cycle. So just be wondering what is price cycle and what does it have to do with the mentorship. So in in a typical day or in a typical week, price follows the same cycle. It's always like that. It has always been like that. So we are going to start with the daily price cycle or the intraday price cycle. That is, um, just go over it like this. I'll point it out. The the price cycle, price cycle, sorry, the price cycle, and then we'll be talking about the intraday cycle, and then the daily cycle, daily cycle. So when we are talking about the intraday cycle, we are talking about what happens within 24 hours of trading. Within 24 hours of trading. So for example, today was Friday. We are talking about the intraday cycle. We are talking about what happened between 12 a.m. today and the current price closing. And then if we are talking about daily cycle, we are talking about what happens on each day of the week. Each day of the week when we are trading. And we are not going to go over every other price cycle like the 20 days price cycle, the 5 days price cycle, 90 days price cycle. We don't really need it. So for now, let's just concentrate on what happens in a day and what happens in a week. Okay, before I start pointing it out, let's just look at something like this. In each trading day, we have three major sections. We have the Asian, we have the London, and we have the New York. What happens in these sessions? Like, have you ever asked yourself, why is it that if price is in an uptrend, even if even though the three sections do not trade together, but they will still maintain that uptrend no matter what until they reaches a certain point and then they decide, okay, it's time for reversals. Like, how does it happen? It's actually very, very simple. When Asian closes, they will send the algo back to London. And then when London actually doesn't close before New York open. When New York opens, they know what London is doing. They'll continue from where London stops. Like 60 or 70% of the day, what New York section does is it finishes what London section started. That's just the entire idea of trading. London starts a trend in a day and New York will finish it. It's just that simple. And then Asian session is always a build up or something we call accumulation, or you can call it liquidity trap. And then when Asian closes or during when the high volatility that comes with Asian section diminishes, there is a gap between that 12 a.m. to 2 a.m. London Open. That's New York time. I'm talking about New York time. Please, everything we'll be doing it with New York timing. Between that 12 a.m. to 2 a.m. that London opens in New York, there is another session. It's called the Frankfurt. And anything that happens between that time is always a trap. So that's why in our first strategy where we talked about the London session trade, waiting for you to just take out the Asian range and then reverse it. I noticed something that most of the times you'll be in profit and all of a sudden London opens and then price reverses to take you out and still continue the trend. And then you were just like wondering what happened, what happened. Yes, I actually discovered that was Frankfurt. Frankfurt open. Frankfurt is what traps people into those early market entry. And then when New York eventually opens, London eventually opens, it takes you out. So right now I'll be giving you some, of course, some indicators to use like the Asian mid, high and lows. They are there to guide you and some other indicators for you to use. So the algo, of course, you know that what controls price, they call it algo, the algo machine or whatever it is. The algo is built in such a way that Asian section accumulates, and then when Asian accumulates, it sends the info to London. London decides to take liquidity, enough liquidity, of course. Like I said before, price needs to grab enough liquidity. It needs to grab liquidity for the day. So London normally grabs that liquidity and then it rallies up. In fact, there are three cases, there are three scenarios that typically happens every day, which I'm going to highlight for you. After highlighting it, go back and back test any day. At least it must be one of those three scenarios, three cases. One of them must actually happen. So let's just dive into it because I don't want this video to be very, very long. In a typical day, what we have is the 12 a.m. open. When price open 12 a.m., it will do something like this. Let's just stop it here. Now, what you are supposed to take note of is that 12 a.m. opening price. You are supposed to draw a horizontal line like this on it. If price is above that 12 a.m. open, it's premium. If it's below it, it's discount. And you know what you are supposed to do in premium and discount. When price is at premium, you look for sales. When it's at discounts, you look for buys. In fact, why am I saying this? Let's put it this way. If you turn your time frame, sorry, to daily time frame, if you turn your trading time frame to daily time frame, and in a day we have a bullish market, daily time frame, that means each candle represents a full day. Like this candle right here represents a full day. Let's just call it since it's bullish, we make it white. So daily time frame, this is a bullish market, a bullish candle. Let's just say that this is the candle that happened or that played out today. You just go down to daily time frame and then I'll show you what I'm talking about. Okay, so this is the daily time frame. For here, for now, we have this. This is the candle that played out today. This is Friday, and this was the one of Thursday, and this one the one of Wednesday, and this was Tuesday, and this was Monday. As you can see, Monday, Tuesday, Wednesday, Thursday, Friday. Each of them represents one full day. So, what actually happens within these days? Let's go back to my chart, and then we go back to 15 minutes, and then we come back here. Sorry, what the hell? And then we come back here. I'm going to remove this from auto. Let me shift it. Oh, network. Sorry guys, my network is really really disturbing me these days, and I don't know why. So I'm just going to delete this. And then I'm just going to delete everything right here. Delete all of them. I'm sorry guys, it's actually my network. And I don't know what is wrong with it. My network is very very bad. So I'm just going to shift this back again. Please, I'm not going to withdraw everything I said before. I will just continue from where I stopped right here. I'll draw back the candle. Then remember we were considering this to be a bullish candle. So there's no point continuing everything again. So this was a bullish candle in a day. And let's just say this was Thursday, yesterday. So there are certain things you need to take note in this candle. The first is this one because this was where the price opened. And then this was the low the price made on Thursday. Of course, this was the low price made on Thursday. And then this was the high price made on Thursday. And then this was the closing price close on Thursday. So we just label them, label this daily open DO, and then label this high of the day, high of the day HOD. Sorry, low of the day. Sorry, this should be the low of the day. This should be low of the day. Low of the day should be the high of the day. High of the day. And then this will be the close of the day. COD or daily close. You just label it BC, daily close. What this happens is that price opens and then went down. That's why I say that when you mark down the 12 a.m. opening price, something like this, you mark it down. When you mark it down, what you should be doing is if price is above that 12 a.m. opening price, you should be looking for sales. If it's below it, you should be looking for buys. Because when price opens here, you don't really know if the day is going to be bullish or bearish unless you have a higher time frame direction that you are following. But if you are just trading off the price cycle, you don't really know. But then when price opens, it made this movement to the downside. And that was why if you cut price down here, you are supposed to buy. And then it rallied up and made this high. That means it's now in the upside or premium. So whatever it does here, you should be looking for sales because you are trying to catch the close of the candle. You never really know. But what really makes you understand or what guides you to know that yes, you are supposed to be looking for sales when price is above, if it's a bullish candle, or you're supposed to be looking for buys when price is below, if it's a bearish candle, is for you to follow the daily cycle. So what typically happens on the daily cycle is that when price opens, you have that build up, and this build up is often associated with Asian range because price opens by 12 a.m. and Asian session actually starts by 9 a.m. So all this accumulation right here is associated with the Asian range. So it is always associated with the build up or liquidity trap. And then after that, what happens next? Price then comes out of the range. Of course, it's a bullish or is a bullish candle. Price then comes out of the range and then gives you maybe something like this. And this is around 1 a.m. in the day, 1 a.m. New York time, and then reverse it, something like this, and then form something like this, and then price still comes down, and then you want to enter off this retest because of course price have already cleared the Asian low. No, it haven't. Yes, price have cleared the Asian low, but this is a trap because London have not opened. You should actually be looking for buys in a scenario like this where the low of the Asian have been cleared when London opens. And London opens typically between 2 a.m. and 5 a.m. That is what we call kill zone. Most of you that listen to ICT, I don't really listen to ICT. Like I don't really study his this thing, but I know about his kill zone. Of course, kill zones are there. Those are the times you have those volatility in market in London session. It comes exactly between that 2 a.m. and 5 a.m. 3 hours, just 3 hours. And then New York timing is towards around 8 a.m. till I think 10 a.m. New York timing. So that is the kill zone that you should be looking to take entry from. Because when price then opens at London, it is most likely to grab this Frankfurt low. And then when it grabs it, it will come for the high. And then New York then opens. New York will give you a fake reaction right here, like a shift in structure, and then come back to retest this Asian range, continue to take the Asian high, and then close it. This scenario that happens in this candle is exactly this thing every single day. Some days it might not be like this. It might not be exactly like this. Some days it might not be. But then, like I said before, there are three scenarios of what could possibly happen in each trading session. The first one is exactly what I have given you here. This is the first one. It's exactly what I have given you here. So if you've watched this video down to this point, you could take a screenshot. I will highlight this thing. I will demarcate it. I will point out from here to here as Frankfurt. So you just label them FF, Frankfurt. I'll, I'll label it as Frankfurt. Sorry. I'll label it as Frankfurt. And then from here down to this point, I'll label it as London, LN, London session, London session. And then from these other points, you label it as New York, New York. This is a typical example of what happens every day. Asian range accumulation, and then Frankfurt fake trap, and then London clears the Frankfurt low, and maybe at the same time grabs an important liquidity. Of course, you should always remember that price is always looking for liquidity. I said it before. Maybe price grabs an important liquidity. It could be previous daily low or previous weekly low, or could be maybe a swing low, a swing low, just any liquidity at all. Price grabs that liquidity. Price needs to generate liquidity before any movement, like I explained yesterday. See how everything is now pointing out together, bringing one piece and then forming one huge something. That's just how it happens. This candle that you see in a day that happens, this is exactly how it happens. This is the first scenario, and then I'll be giving the second scenario. My network is really very bad, guys. I really don't know because this is actually even it's lagging. I don't even know if my voice is corresponding with what I'm showing you guys. Please, you just have to bear with me. It's the network. It's really raining down here heavily, and that's why the network is so bad. I'm really sorry. So this is case one. We'll call it case one. Case one. So pause this and take a screenshot once you get here. If you've taken your screenshots, fine and good. I will delete everything and then we go over to case two. The same candle, daily candle, it's bullish. Please, for everything we are doing right here, we have to assume that it was a bullish day. I don't want to go over bullish and bearish day. Of course, whatever happened in the bullish market, the bears is just a reverse of it. It follows the same cycle. So I won't be drawing the same thing. So case two, case two is now something like this. We also have okay, let's say we have an important liquidity right here. Could be previous month's liquidity, previous week or something. It's liquidity. And then we now have that Asian accumulation, New York time open, the Asian accumulation grabs this liquidity on its own and then continues up and then retests at Frankfurt and then okay, let me just explain it right here. This was the Asian accumulation here. Everything here was Asian. And then right here, we have important liquidity. I'll just label it important liquidity. Like I said, price needs to grab an important liquidity. So I'll just label it important liquidity. So the Asian range or the Asian section actually grabs that important liquidity and then rallied up. You see this low right here, the algo will send it out to London. Check price very, very well. There are some days that price doesn't clear out Asian high or lows. It will just clear one side instead of the two sides because from what we understand, it's supposed to clear the two. But then at some point, Asian section forms the low of the day. Normally, London section is supposed to form either the high or low of the day, and then New York section completes it. 90% of the time, London section and New York section forms the low and high of the day. But in some cases, the high of the day or low of the day is formed by the Asian section. Why? Check such days. The Asian section grabbed important liquidity and then the algo then sends out this info or data to London to tell them yes that we've actually grabbed the liquidity that we have been looking for and we have an order there. So this low should be protected. Now remember this is now Frankfurt and what happens? Frankfurt have now given you this fake movement to the upside. Frankfurt have now opened and it has given you this movement to the upside. Now, this is the fake out. We will now assume that okay, everything here is Asian range. So this was the grab of Asian range. And then what will London do? London opens and then come for the Frankfurt's fake trap, take it, retest it, and then New York completes what Asian or what London started. It's simple. It's just very, very simple. This is case two. We still label it. This was London, and then this was New York, and then this was Frankfurt. I'll still label it as I did before. Frankfurt, and then London, and New York, and New York. Does this still need explanation? you already grab what I'm saying. Asian section grabs an important low or high. And when I mean grab, I mean aggressive grabbing. Even the former one, it needs to be grabbed with aggressiveness, with impulse, for you to know that yes, it was the institutions that moved the price like that. It wasn't all these retail traders and all those other stuff. Like, it's called aggressive grabbing. Price moves aggressively to grab the liquidity and then reverse to the other side. It's just that simple. Then price grabs liquidity, whatever liquidity it is, and then Asian section grab the liquidity and then fix a trap on Frankfurt. And then London section opens and then takes out the Frankfurt's high. New York session opens and completes what London session started. This is basically the second scenario of what could happen in a day, in any day at all. It could be, I don't really know, it could be any day. This could be a second scenario. And then we could also have a third scenario. And this third scenario, or third case, case three, is where you have, of course, the Asian accumulation. It didn't grab any liquidity, of course. But then Frankfurt Frankfurt opens and grabs the high of the day, and then London, sorry, this will now be London open. This is Frankfurt open right here to this point, and then London opens at this point. London opens and then comes down to retest any zone right here, and then there are some things we should be targeting ahead. Maybe we have a liquidity here, which could be previous day or previous week. Let's just call it previous week high. And then we have another one, which could be a swing structure or whatever it is. And then this then happens that London will open and head towards this liquidity. London grabs both of them, and then New York opens to retest it, or maybe could even be New York that grabs it and then comes down for this one before closing. This is another case of what could happen. And then you'll be left wondering, but then when price opens, let me just label it, just say, when price opened, the high was grabbed. But then when London opened, it didn't really grab the low here. It just grabbed the high and then continue moving up before coming down again after New York. What happened? What happened? What happened? That was why I actually explained liquidity, important liquidity first before coming into the daily cycle or the intraday cycle. What this actually means is that the London session doesn't just open to grab the Asian low or high. Of course, the Asian low and high is very, very important in the market. They needs to be cleared as well, unless they themselves grabbed an important liquidity, like I mentioned in case two. But if they didn't, sorry, this is exactly what happens in some cases. I didn't say every day. This is another case. This is case three of what could happen in a day. The Asian accumulation low will not be taken, but then the high was actually taken by Frankfurt, but then London comes back to clear the trap set by Frankfurt. Of course, Frankfurt will always set the trap. It will come back and clear it and then continue rallying up, and then you just be left wondering, okay, this is now protected. And all of a sudden, New York then rallies down and then clears out the low of the Asian session. You just be wondering, but why didn't London just take it and then it will just continue up, since that's what case one said? Well, there was an important liquidity. Price needs to grab liquidity. It's just that liquidity. So when you open your chart and you want to like point out anything that happened, one thing you should be looking for first is liquidity. Mark out those important liquidities and then watch what happens when price grabs them. That is just it. There is no other way. It could be swing high, it could be previous day, it could be previous week, whatever it is, just mark the liquidity. Point out liquidity first. Liquidity is market structure. If you don't get the liquidity points correctly, in fact, just mark out every single high and low you see in the market. It's liquidity. You don't know which one is protected, you don't know which one is not. So just mark them, and when price grabs any one of them, that is when you go down to lower time frame to look for setup. When you understand where you are in the circle, you will definitely find a setup to continue it. Like, I've given you three cases of what I myself have seen in books. I've back tested them and I see they happen. I've given you the three cases. The only thing I want you to do right now is just go back yourself and then sit down on your own, just be on your screen and then take price back. You don't even need to use replay mode. Just 15 minutes time frame. You can go as far back as any month and then start checking it out how they happen. You can even take it to 30 minutes to get more candle bars. Of course, it's you. If you don't have the replay mode, you can use just the normal data. You don't need to like cheat yourself. At least study them as they happen and compare each day to the case I've given to you and see how it happens. It's just that simple. I'm going to like go over it to show some examples as well. Of course, that's how it should be. But now, before we go over that, let's dive into daily cycle. What happens in a week? So I assume that you've all taken the screenshots of this, so I'll just delete it. So delete everything. Then the network is just too bad tonight, and I really do not know why. I don't just know why. I'm sorry, guys, for that pause. I'm really sorry. I had to check my Wi-Fi to see what was wrong with it. So the next case is what happens in a day, in a week. The same candlestick formation that happens in a day where you have open, low, high, and close is the same thing that happens in a week, in a month, in a year, 4 hours, 8 hours, 12 hours, 1 hour, 30 minutes. It's all the same thing. All of them follows the same pattern. So what happens in a day? What really happens in a week? Sorry, that's the daily cycle. Go and check what I'm about to tell you right now. In every single week that starts, Monday and Tuesday, you can jot it down and go and backtest it. Monday, in fact, 80% of the time, okay, let's just say 60% of the time, Monday forms either the high or the low of the week. For a bearish week, Monday will form the high. For a bullish week, Monday will form the low. If Monday doesn't form the high and low of the week, it will definitely be formed on Tuesday. I will give you a scenario or a schematic of what I'm talking about. On Monday, Monday accumulates. Remember what I said about the accumulation and then price then manipulates it. Exactly like Asian session accumulation, London manipulates, grabs it, and then fakes out. Monday accumulates and then comes down to grab liquidity and then rally up. This is what happens on Monday. So I'll color this maybe red. Okay, let's just call this, sorry, we'll color them, okay, white to signify Monday. And then Tuesday, this is case one of what happens. What happens on Tuesday is that Tuesday accumulates more price and then continue up. We'll label this as maybe blue. We call this blue box. Tuesday. Change the color to Tuesday to blue to signify Tuesday. Then Wednesday, we continue what Tuesday started. And then after clearing the Tuesday's high, Wednesday can either cause a reversal to complete the week or it will just close. So there are two cases. Wednesday will either form the reversal or it continues, but then Thursday and Friday will definitely cause reversal from what was happening in a weekly cycle. So we call this Wednesday. I'll then mark this as green to signify Wednesday. Maybe this. Then Thursday, sorry, Thursday, price just rallies up and then starts distributing. Distribution on Thursday grabs the high and then we'll mark this as yellow to signify Thursday. Mark it as yellow. And then what on Fridays, price completes what happened on Thursday. This is the daily price cycle, the weekly price cycle, or in fact, it's the daily price cycle. Price completes what happened or what Thursday started. We label this as red. Red. This is what happens in a particular day. Monday forms the high and then the low, and then the high of the week is either formed on Wednesday or Thursday. And then Friday is always to bring back price down. Because if you notice in a week, okay, let's just go to weekly time frame, 1 week. If you notice in a week, okay, this was a bearish candle. When price opens to the upside and then comes down, it doesn't just close at the lowest low or highest high. Sorry, I you guys really understand what I'm saying because I explained it with 15 minutes. Sorry, with the daily candle, it's just typically the same thing. Price opens and then comes down and then rallies up and then closes. That coming down is always or mostly formed on Mondays. And then the next scenario, this is case one. You can take a screenshot. I'm going to show you this. The next scenario of what happens is another style or another case of what price could do. I'm just going to draw them again. Sorry. In this case, Monday doesn't form the high or the low of the week. Please, we are using a bullish week, but instead, what Monday does is it accumulates price. It accumulates a lot of accumulation. Then on Tuesday, price clears out liquidity to form the low of the day. Then Wednesday, price reaccumulates and then continue what Tuesday started. And then Thursday, price starts distributing. Friday, we then have a reversal. This is case two of what happens in a week. Sorry. of what happens in a week. If you find where you are in the weekly, in the daily cycle, or in the intraday cycle, there are two cases. I've given it to you. Once you've noticed that Monday has formed a low and Tuesday have continued from where Monday stopped, you know that we are bullish. So you should be expecting that Wednesday will complete what Tuesday started, or or produce a reversal. So you should be looking for setups in that scenario. So that's why I tell you guys that I don't usually trade on Mondays. So this is the reason why I don't trade on Monday, because I want to see what Monday is doing. I want to see if it will grab important liquidity and then form either the high or low of the week. And then on Tuesdays is mostly when I send out setups to the group. Why? Nobody has ever actually asked me that question. Why don't I trade on Mondays? I will definitely tell you that I want to check what the price will do. I want to check if it will accumulate and cause manipulation, or if it will just accumulate. If price accumulates and causes that manipulation to the downside, I definitely know that Tuesday will continue from where Monday stopped. But then if price accumulates on Monday and don't produce that manipulation, Tuesday will produce a manipulation before the up move. You never know if it will produce manipulation to the upside then rally down, or manipulation to the downside and rally up. That's why you need to wait. So you need to wait for that manipulation, grab that important liquidity. You say, fine, here we go. We need to now start looking for where to grab it. Like, in fact, this entire scenario, I just marked it out. Like, I marked out previous days, like this week. I think how many weeks ago? Where did I even start? I think I started. Okay, let me just. This was another week. I have to check for where Friday of this week stopped. Okay, this one. This was where it stopped. And then another one. I just want to explain this one first before we go over to the last one we did. So you guys should just bear with me. So let's just start from here, from where I started. This entire um this is how many weeks? One, two, three, four, five, and so on and so forth. I don't want to count it. So let's just call this week one. What happened? If you notice, this was Asian section. On Sunday, they are opened against Monday. Of course, market will open on Sunday. So market opens on Sunday, and then we now have Monday down to this point. Now I will highlight Monday for you with a box. This was Sunday. This was still Sunday. Okay, this was Monday 12th. From this point now is Monday, and this was the accumulation. Monday down to this was Tuesday by 4. Monday, Tuesday. Okay. This was Monday price accumulation. This range right here set up by price from this point was Monday price accumulates. And then what happened? On Tuesday price forms the high. This was the high on Tuesday, and then rallies down. Sorry, price forms the high on Tuesday after the manipulation of Monday's accumulation or range, because as you can see, this was a range. Price didn't really go above this particular range. And then after that, Tuesday now manipulated, and then Wednesday continued what Tuesday started. This was Wednesday's movement, continued what Tuesday started, and then this was Thursday and Friday. Like I told you, Thursdays we distribute, and Friday we complete it. This is exactly the boxes I've marked out for you. This was case 2 happening. Monday accumulates, Tuesday manipulates, Wednesday continues, and then Thursday and Friday closes. The next week, what happened? Price opens on Sunday here, And this was the accumulation, the Asian range accumulation. And what happens there? Monday grabs the accumulation. The manipulation happened on Monday, exactly London, at London Open. Monday grabs the accumulation and then continued up. And then Tuesday now starts and finished up what Monday started. Wednesday continued and finished up what Tuesday started. And then on Thursday, distribution happened to close the week on Friday. This was case one. This following week, the same thing. Monday started it, Tuesday continued, Wednesday continued, Thursday distributed, Friday closed. The same thing. The next week, the same thing. Monday started, Tuesday continued, Wednesday, sorry, this was Thursday. This was Thursday. Thursday distributed and Friday then closed. That is it. This particular day, which day was this? Okay. Monday accumulated and then manipulated, grabbing all this entire liquidity right here. Monday manipulated, Tuesday continued, Wednesday or down to on Thursday for distribution and then close. And then this week, this was Monday, of course. This was Monday, Sunday to Monday, and then Monday grabbed important liquidity. I think I actually used this particular liquidity for our class yesterday. I'm sorry that I wasn't marking out the previous liquidities, but I think I was using it for liquid our class yesterday. Monday grabs this important liquidity, and then Tuesday continue from where Monday stopped. Wednesday, Thursday, although the week was actually very, very choppy, but you get what was happening on Wednesday. You get what was happening. And then the same thing this week. What happened? This was Monday down to this point. Monday grabbed liquidity. Was there any liquidity grab? I can't really see, but I think if you go down to a lower time frame right here, you might see this might be a liquidity grab right here, this low, this low right here, liquidity grab. Maybe go to 15 minutes, maybe even 5 minutes. You might see the liquidity grab right there. That Monday manipulated. Yes, you can see it. This was the low. Monday grabs it. Tuesday continued. Sorry, Monday grabbed the liquidity and continued. Tuesday came back and reaccumulated. Then Wednesday completed what Tuesday started. Thursday distributing and closing. On Friday, the same thing. Today, this week, this was Monday, the range. There was no liquidity grab yet on Monday. But then the liquidity was now grabbed on Tuesday. As you can see, Tuesday cleared out the entire liquidity of what happened. On Tuesday, the liquidity was cleared. And then Wednesday completed what Tuesday started. Thursday distributed, Friday closed. It's just that simple. I didn't make the market. The market was in existence even before my own mother even got married to my father. I just came in and saw it. I studied it and I found out that this is how it happens and this is how it has been happening. It continues that way. I don't really know if okay, let's just go over this one. The intraday cycle. If you want to know what happens in the intraday cycle, I think I have you know the indicators to use, of course, many of them, many of the indicators to use. So this is one of them. This one, the ICT Q zone by Lux Algo and the Q zone boxes. So if I put on the Q zone boxes, it will mark out my Asian section and my London Open for me. I think let me set it. Asian, sorry, London Q zone and New York Q zone. This only marks out the London Q zone and New York Q zone for you. in the market. So London Q zone, New York Q zone, London Q zone, New York Q zone, London Q zone. You can check the settings of the this thing. The Q zone time from 2 a.m. to 5:45 for London. New York is from 8:30 to 10:45, and then show the high and low and all those stuff. You can just screenshot it and set your own like that. But then you can now use any of the indicators that max out Asian high and lows. Like if you use the one by Lux Algo, it will highlight the Asian range for you. Like for example, if you look at this, you know that the Asian section started somewhere around here, and then London section manipulated something, don't really know. This was London manipulation, and then continuing up, and then New York completed what London started, and then this was exactly the same thing. Like I think this was case one or two or whatever it was. Case two, case one was okay. This was case one. This was also case one of where London manipulates. Sorry, Asian accumulates. London grabs Asian low or Asian liquidity and then heads down. And then New York comes back to retest and completes what London started. It's almost like that. And this was case three. Remember what I said? Case three. I mean, yes, this was the last case where Asian section was not actually cleared by London, and then Frankfurt actually took the Asian highs or lows. Frankfurt cleared it, and then London now retests and continues to the upside and takes out the Frankfurt, and then New York section brings the price back. This was exactly case three. If you keep going down, you can go to ICT this thing to check the settings. I only marked out the London Open. I can even take out the London Open right here because I don't need it. So take out the London Open. We only have the Asian. You can just mark out the Asian range. It will highlight the Asian accumulation for you, and that was just all you need. That Asian accumulation, or you can use the other Asian indicators that we normally use. It's all up to you. So you can find those accumulations, just like this one. This was the Asian accumulation. London comes back, grabs the Asian accumulation, grabs this liquidity right here, and then takes it up. New York comes to grab this other liquidity and then bring price down. This was case two. Of course, this was case two of what I highlighted. You can continue going up. Asian, London. This was case, I think this was case three. London didn't clear Asian, but then came down to grab an important liquidity to the downside or to the upside, and then New York brings it out to now clear the Asian high. This was case three. It keeps on repeating. Like I've just I always find something new like to make things easier for you guys. You have the ICT Q zone by Lux Algo, you have the Q zone boxes, ICT Q zone boxes. You can just search for it, Q zone boxes. You will see it. ICT Q zone boxes. This is the second one. You will see it. And then use all of them, combine all of them together, and then check how the price repeats itself every single week. I think this video is already long enough, so I wanted to actually like add market structure to it, but this is already up to 1 hour or so. So I will just end the class at daily circle, and then tomorrow I'll drop market structure or maybe inefficiency and efficient price movement. So thank you guys for joining the class, and I hope to see you guys again tomorrow. If there's anything I said in the video that you don't understand or the one of yesterday, please feel free to ask questions. That's why I'm there in the group. If someone else knows the answer, they will answer you. If they don't, I will definitely answer you. So thank you once again and see you tomorrow. Bye.